Welcome back. Let's take a look at exercise 7-2. Continuing on with long-term asset acquisition, we now look at an equipment that's being purchased. Here we have a company that has purchased a new equipment and made the following expenditures. They paid the purchase price is $75,000. So when you're looking for the original cost of the equipment, we always start off with the purchase price. That's our starting point, $75,000. We had to pay $6,000 in sales tax on that purchase price. It's a one-time expense. We had to pay it, otherwise we were not going to get that asset. So that gets added to the cost of the asset, $6,000. Shipment of equipment, $1,000. Again, this is a special equipment. We had to pay the shipping charges, and that gets added to the cost of the asset. That's $1,000. Insurance on the equipment for the first year. After I bought the equipment, I had to pay insurance. This one is not an original cost of the equipment. It's an ongoing recurring expense I'm going to have. So I cannot include that in the original cost of the asset. Now, if this was insurance paid during shipping, I'd have included it. But this is for the first year, which means it's going to happen again. So this one doesn't get included. Installation of the equipment, I had to have it professionally installed. I had to pay the installers $2,000. That gets added to the cost of the asset. So that adds up to a total of $84,000. Now let's do our journal entries. They're telling us all expenditures are paid in cash. So this entire, all of this 84,000 plus the 700 was paid in cash. Let's first take care of the 84,000. All of this is the original cost of the equipment. There will be equipment account debit, cash account credit, and that's the $84,000 that we calculated over here. This $84,000 is debited to equipment. What about the $700? That's just a regular expense. Insurance expense debit, cash credit, and that's going to be your $700. So this insurance expense, you can expect to have it year after year. This is a recurring expense. It is not added to the cost of this asset. Now, one of the reasons why this is so important that we identify what the original cost of the equipment is, because $84,000 is being capitalized over here in our books. I keep it as an asset in my balance sheet, and I'm going to depreciate the asset over the estimated useful life of the asset. We'll take care of depreciation in a future exercise. So with that, we move on to our next exercise.